Hello, this is Mr. Bergman, and this is Chapter 9.1. We're going to be showing you the purchases journal and how to record transactions in that. Now, first of all, as a review, can you name the 5 different types of source documents? Well, we know that one is a check, and you would use a check when you're paying cash. Receipts are another one, and that's when you receive cash. A sales invoice is used when you purchase something on, or you sell something on account, sorry. A purchases invoice is when you purchase something on account. And then last but not least, you have a memorandum when no other source document is used. So in this chapter, we're talking about a corporation. That's the new type of business that we're dealing with, owned by many, many different shareholders. And this corporation is a merchandising business. And so there's a couple differences between a business that sells services and one that sells merchandise. Businesses that sell services for a fee. Merchandise is when you buy something and then you sell it for a profit. So when you're running a merchandising business, you can actually sell goods to those who consume that particular product. For example, if you went to Walmart and you bought a box of Cheez-Its, you would be the consumer. Or you could have a wholesale type of business where that business buys merchandise, say Hershey's chocolate, and then sells it to the Walmarts and Targets of the world. So that's called a wholesale business. Now, something that you need to know is that when you have a merchandising business, whether it's a sole proprietorship owned by one person, a partnership owned by two people, or a corporation owned by many people, it uses many of the same accounts as the business that we've been working with, a service business, which sells a service uh, to customers. However, there's a couple different accounts that we have to be aware of, and one of those accounts that we're going to be talking about is purchases. Now, this particular business that we're dealing with is called a corporation, and one of the biggest things about a corporation that you need to know is that shareholders usually buy it to invest in it. Has a very limited liability, meaning that if you get sued as a business, the CEO and other managers won't necessarily get sued either. It has an unlimited life, meaning it'll keep going, and that's the concept, accounting concept, going concern. Okay, so because we have so many different transactions every single day, a special journal is needed, and so we have 5 different types of journals that we're going to be working with. We have a cash payments journal, and that's only used when you pay cash. Okay, so that's very, very important when you write checks. Cash receipts, that's when you receive cash. The sales journal is when you sell something on account. The purchases journal is when you purchase something on account, merchandise, and that's going to be resold. And then the general journal is when no other source document is going to be used. Notice that these source documents go with the particular journal that we're going to be working with. Okay, so let's take a look at the work together problem for 9.1, and it says the purchases journal for Lambert Hardware is given below, and we're going to use the current year on page 10 of the purchases journal, and purchases invoices are abbreviated as the letter P. Okay, now what we have to realize is that we pay money to what is called a vendor, somebody who's selling us merchandise so that we can resell it. And that is a cost to our business, the cost of merchandise. Now, what we tend to do is if we buy, say, a box of Cheez-Its for $2, we're going to sell that for $3.50 and mark it up so we can get a little bit more money. So, very, very important to understand what a markup is. Now, we have a new account called purchases. And anytime that we purchase merchandise, okay, merchandise, that will go in the purchases account. Now, the key word right here is it says that we purchase merchandise on account. If we purchased merchandise on account, okay, we're going to be using the accounts payable account right here. And we're going to be putting that in the purchases journal. So the main purpose of the purchases journal is anytime that you purchase merchandise on account, a special purchase memorandum right here or invoice is prepared. If you purchased merchandise with cash, that would actually be a different type of transaction. So just keep that in mind. Now purchases, that's an asset. It has a normal debit balance, so that means it increases right here on the debit side and it decreases on the credit side. And we already know accounts payable. So with this particular transaction, if we bought $1,230 worth of merchandise, we're going to debit purchases because we're going to resell this. Okay, but we bought it on account. That means we're going to buy now and pay later. So accounts payable has a regular credit balance. So if we're going to put this in our purchases journal, okay, we have to notice that our purchases journal is set up a little bit differently than our multi-column journal that we've been working with. Still has the date column. Now the account credited, that's going to be very, very important. The account credited is the accounts payable account. We're going to put down what accounts payable account, the name of that accounts payable account, right here in this amount credited. So notice that's the credited amount. In the purchases journal, purchases are always debited because you're buying merchandise. So let's go ahead and put this very first thing in. We would obviously put in October 2nd. We bought it on account from American Tools, so it's accounts payable American Tools. But notice, we don't have to put accounts payable. We just put American Tools down. Okay. Then we put down the actual purchase invoice number. Notice we don't have to put a P in front of it. The P tells us that it's going to be in the purchases journal. We just need to put 116 afterwards. And then this special amount column, both purchases and accounts payable for American Tools are going to be credited and debited for 1230. Now notice we have a post-reference column. This post-reference column is going to come into play later, and we'll show you why. Okay, so the next one is we purchased merchandise. Okay, we purchased merchandise. That means purchases account is going to be used. On account, that means we have to use the purchases journal because it was bought on account, and it was from Harris Manufacturing Incorporation. So it was for $480, and we used purchase invoice number 117. So once again, we're going to debit purchases for $480. Okay, we're going to credit accounts payable for $480. Very important that you know that. And when we record that in our journal, we'll put the date. We'll put down Harris Manufacturing Incorporated. Okay, remember this is the accounts payable account. Harris Manufacturing Incorporated. We just don't put accounts payable. We put the purchase invoice number 117. They go in order. See that? And then we put $480 in. Okay. So then on the 11th, we purchased merchandise. Once again, we purchased merchandise. Okay. On account. So that means we have to use the purchases journal from Kiesler Supply for $780. So we put down the date. The 11th in our journal, and we would debit purchases for $780, and we would credit accounts payable for $780. So that's what your transaction would look like. Now at the very end of the month, it's very, very important to know this. At the very end, we have to total and we have to rule this purchases journal. Now we only have one column that we would total up, and this particular column is going to be the total of both purchases, the debit amount, and accounts payable, the credit amount. So when we do that, we're going to put down the date, which is usually at the end of the month when we do this. We'll put the word total down at the bottom, and notice we don't usually do that. We didn't do that in our journals before. We did brought forward and carried forward. For this particular purchases journal, they want you to put down total, okay? And then you would put down $2,490 right down here. And notice you can leave this purchase column right here blank. All right, and that's it.